The U.S. trade deficit narrowed unexpectedly in September, going to a level they haven't seen since mid-2020, and driven by a surge in exports, likely supported by a weaker U.S. dollar and Donald Trump's tariffs. Let's go to Dennis Lockhart, American economist, former CEO of the Federal Reserve Bank of Atlanta. Thanks for joining us today.
Thank you for having me on.
Are the tariff plan, the big tariff plan from Donald Trump, is that working?
Well, it certainly is creating some concessions, I think. I'm particularly thinking about some of the investment commitments, but it's still having an effect on prices. And I believe that the tariff story as regards inflation is not over. It's yet to be played out, and we'll see some pressures on prices in 2026.
Why do you think so? Why is that an extended timeline for that price pressure to hit the consumer?
Well, it's hard to know exactly, but it appears to me that many price setters have been coping with the early months starting in April of the tariff situation. It was so erratic in its implementation, and there was so much uncertainty associated with it that I suspect many took measures in the short term, waiting for the tariff picture to settle into something more like a steady state when they would make their more strategic decisions on what their prices were going to be. So I think that erratic implementation has more or less continued to this day, and there are decisions ahead on the part of price setters that will take place in the early months of 2026.
Okay, given that you think the outlook for tariffs or the tariffs have yet to sort of work their way through, and given the weakness in the American labor market, are you on side with the cut that you saw by the U.S. Federal Reserve yesterday?
Yeah, I think it was the right decision. It was certainly widely expected. And I view it as the completion of an insurance policy, or sometimes called risk management kind of posture of policy, to build some support underneath the labor market so the labor market does not deteriorate further. I do believe, however, in 2026, there's going to be more attention on the inflation picture. And that, of course, is tied, at least on the good side of inflation. It's tied to the tariff policy.
Let me ask you also about the announcement by the chair that they're going to buy Treasury bills, and I'm wondering what you made of that.
Well, I don't think it's quantitative easing all over again. I buy the argument that this is really reserve management or balance sheet management. It's temporary. It's supposed to run through tax day, April 15th. They're simply going to ensure that the overnight money markets are liquid and are stable, and therefore it's a temporary measure. It's not something that is aimed to try to stimulate the economy.
Do you think it's clear what the path forward will be for rate cuts? And I ask because, of course, there will be a changing of the guard next year. And Jerome Powell set out that the bar would be higher for rate cuts in the future. But anything could happen if you have somebody else leading the Federal Reserve.
I think that's true. It's starting mid-year, we'll have a new chair. And so how that chair leads and what the committee decides could be different than what would happen under Chair Powell. The best we have at the moment in terms of an outlook for rates is the summary of economic projections that was published yesterday. And this is a conjecture at the beginning of the year. It's not something that's very firm, but nonetheless, a majority, 11 of the 19 participants in the committee, saw one or fewer cuts in 2026, and 7 saw no cuts in 2026. So I think the committee, for the most part, is becoming more hawkish as regards inflation, and they want to wait and see how the data actually break over the coming months, but are inclined to give some attention now to inflation.
And I was going to say, you think it will be about inflation next year as opposed to jobs?
One hopes so. One hopes that that the employment markets don't deteriorate. It will depend, of course, on how the economy actually behaves. But if you can take today as a starting point, I think there will be more attention to inflation in 2026 than in the last few meetings.
All right, I will leave it there. Dennis Lockhart, appreciate you joining us on the close today. Mr. Lockhart is an American economist, former CEO of the Federal Reserve Bank of Atlanta.